Start? Alright. So, intangibles. There is a, for the analysis purpose, sometimes companies what they want to see is that if this particular cost, my general policy is that say I capitalize this kind of cost as an intangible asset. But if it happens just for analysis purpose, I want to see what would have happened if I had not capitalized it and if I would have expensed it. Alright? So that analysis, there are few questions in the quiz. So we're going to just take a dummy example to see how does it impact. Example. So say my cost of that asset or whatever is that amount, the R&D expense, let's say R&D expense is say 100. Okay? No salvage value, it's an intangible, right? Okay. Simple. Okay. So I'd appreciate it. The useful life it's say 5 years. So amortization per year
20
is 20.
This is R&D expenses or development expenses?
Anything which I am capitalizing. I am just calling it R&D for now. Let's say not expense. R&D, research and development, which I have capitalized. Okay. Default policy for the company is that I capitalize such expense. There is a specific nature of expense, but let's say this R&D expense I capitalize. This is my general policy. Now year 1 I had this expense. Okay. Year 2,
20.
let's say I had another 50 rupees. And same idea, 5 years and 10. Okay? This is fine. This is my amortization for each year.
Okay, the second year you have capitalized another $50.
Right.
So your this first year will be 20, the next year will be it is 30.
Yeah. So we will see how does it impact our balance sheet and P&L as well at the same time. So if we talk about balance sheet, year 1, year 2, I capitalize it. How much do I capitalize? 100. Next year I will have another addition, so it will become
150.
Right? This will be my gross block less
Depreciation.
accumulated depreciation. Accumulated. Depreciation goes into P&L. Accumulated depreciation or accumulated amortization.
Amortization is.
These terms will be used interchangeably. Means the same thing here. Right? So I have accumulated amortization. In this case, how much would it be for first year? 20. Right?
30.
Second year?
30.
30. Correct? No questions here? So I had a net asset of 80 here
120.
and 120 here. Correct? Now what is the impact of this on my P&L or income statement, whatever you call it as? Again, year 1, year 2. Right? So I am talking about only amortization expense. First year I will have a profit which will be less by 20.
Yes.
And second year I will have profit which is less by 30. Correct? Now when it comes to expensing it, now company wants to do an analysis that what would have happened if I was expensing it, right? What will be the impact in year 1 and year 2 for me? So impact, we are talking about impact on balance sheet and impact on income statement. Okay? Year 1, year 2 and here also year 1, year 2. So if I am expensing it, what happens to my balance sheet?
Your asset will go down. The cash will go down by $100.
Cash? Cash won't go anywhere.
Asset.
I have still incurred that cost, right?
Investment will go down by...
Investment?
Your
asset, the asset that you talk.
Intangible assets.
Intangible.
Right? So intangible assets would go down by how much? 100 in first year? Or 80?
You won't incur the expense, so there won't be any intangible assets.
I incurred the expense. But I incurred that cost. Research and development, for example, I bought a lab rat.
So, sir, in that case, either your cash will go down or your liability will increase. Either the two will happen.
Cash will not go down, right?
See, I incurred this cost.
So you have incurred the cost.
So, for example, research and development ke liye I bought this table. Now, I bought this table. Now, how do I account for it as a separate matter? But I bought it, I paid for it. So there will not be any impact on cash.
Because I already got the asset.
I bought it, yeah. What do I do with it is a separate matter.
You have bought it, you have paid for it, na?
Correct.
How you have paid it?
Cash.
Cash. So cash will go down, na?
Okay, yeah. So cash portion of things I am not talking here. We are talking about only whether I capitalize it or whether I expense it and related amortization and P&L. Cash piece you know already, yeah, there will be a minus 100 here. we are not touching the cash piece here. Okay, so moving on, intangible assets. Year 1 intangible assets, how much would be the impact?
100.
Not 100.
You won't be buying it. 20 rupees you have, amortize you, that there will be nil
And in
amortization.
case we have not, see, that is only when you actually capitalize it. In case you don't capitalize it,
There will be no
you should,
effect.
then it will be directly 100, right? You will not have.
There will be no effect in fact.
Why?
Everything will be expense. So there will be no, you are not
I'll
capitalizing
tell you why
it.
we are considering that there will be an impact on balance sheet. Simple thing, that I have been given this balance sheet. Okay? I have been given this balance sheet, and if I had to redraw a balance sheet by expensing it,
Then 80 rupees.
what will happen? My total assets would go down, right?
Yeah.
In the new balance
Yeah,
sheet.
Yes,
correct,
yes.
correct, correct.
That's what we are talking about.
But
So
why
with-
not 100? Why
80.
not 100?
How much do you have
Amortize
in
is
the balance
20.
sheet?
Oh, the balance sheet has 80. Oh, okay.
So you will say my net assets
Okay.
have gone down by
80.
80.
now.
Okay, 80 less. Okay.
Good.
Uh-huh.
Next year my assets have gone down by
120.
120.
This is fine.
Fine.
Understanding the impact on balance sheet.
Hmm.
Now coming to P&L,
Hmm.
what is my impact?
100 rupees. 100 rupees loss expense. The profit
Now,
go down by 100.
again, here also I'm going to be starting from here, right? So I have already been given a P&L account, right?
Yeah.
So I'll start from
So
let's
this
say
is plus
net
20,
income.
right?
120 के factor हो जाएगा.
Correct. So if my net income will also be minus 20 and minus 30,
Huh.
right?
Huh.
Now when I'm preparing a change,
Hmm.
what will I say? अच्छा यार पहले तो remove this impact from the number. So whatever was my net income minus 20
Plus
and
20.
minus 30,
Huh.
I'll say remove this impact,
Huh.
so that you know I can calculate what is going to be my impact. This is clear, sir?
Yes, बिल्कुल.
Bringing it back to zero, right? Now after this, now I say okay, I would have
100.
expensed it. So I'll
100.
say 100. I'll
100.
say. So what is my net impact?
120.
So
80.
20 plus. So my expense, my profit, if I don't consider that amortization, would go up by 20
Yeah.
and down by 100. So net impact would be
Minus 80.
80. Correct?
Hmm.
Because I'll add this back and reduce
You're
this.
expensing this. Yeah. Hmm.
Same for next year, it will be.
20.
Next year should it not be 150?
No. You already expense 100 in the first year.
So I
Okay.
expense this now.
Okay.
Now next year I'm saying that I amortize 30.
Okay.
Now let me add that back
Okay.
and then expense whatever amount I incurred. So
Okay.
it will be minus 20.
20.
So if you see the cumulative impact of it, then I will have a reduced profit
Hmm.
of 20 in this year
Hmm.
and a reduced profit of 80 in this year. Good? Understood?
This doubt might actually be very silly, but if we are actually doing it this way, then when we are capitalizing it, right, on the balance sheet for year 2, why did we take 150 there instead of just the 50?
We
Because we've
took only
already
50. The balance sheet is a balance, right? So originally I had an asset of 100, but I still have in year 2, right? Then I
Okay.
bought another 50.
Okay.
So this becomes 150 now.
It is cumulative.
balance
also.
Okay, okay.
Right? Now, same thing, everything. We don't have any amortization as of now. But if we had to calculate, let's see. So what I'm talking about now is that if I would have just expensed it, my default policy is expensing it. Okay? So any R&D, this kind of expense, I put it onto P&L account or income statement. Now what would happen if I capitalize?
Capitalize.
The other way around. So let's clean this up a bit and put it again.
This amortization rate and everything they've given in the question.
Yeah, they will give what is the useful life and all that for that asset.
There were questions 3 and 4, I think, were revolving around this, and I actually got lost in both the questions. We were doing both the questions,
Anikariya.
completely lost.
Anikariya.
Right.
Anikariya.
So, here we're talking about by default is expensing. So what is the impact on my balance sheet?
There will be no impact.
No
No.
impact.
Right?
Hmm.
What's the impact on my profit and loss?
minus 100.
Minus.
Minus
100
50.
Good with that existing
Fair
impact?
enough. Yeah.
Now what happens if I capitalize it? Right. So my assets plus 100 first and
It's
It's
150.
150. Huh.
good with that?
Yeah.
But there is a question of amortization as well.
Hmm.
So how much amortization here?
Less 20, less 30.
See,
Good.
if you are expensing, then won't your retained earning go down?
Yeah, so we kept minus 100 and minus
So
50
won't
here.
that liability part change?
This will flow into retained earnings.
Returning, then the liability will
Yes,
again
flow
decrease.
into- So again, we are focusing on the asset piece of things, not the cash, not the retained earning. Any expense you put here will going to impact my retained earning. That's there given. Asset changes. These are the changes. So my first year asset would be up by 80. Second year asset would be up by 120. Looking at P&L again, I have to
Minus 20 and minus 30.
change this effect first.
Yeah,
So
plus
I'll say
100,
Plus 100.
Plus 100 plus
plus
50.
50,
Okay.
Now I amortize.
minus 20, minus 30. So 80 and 20.
So my net income would be up by 80 and 20. This is what is the analysis. Good with this?
I'm fine.
Done.
Any other question?
ये हो गया. Stop.
Hmm.